Welcome back to the program. You can join us on Twitter at CTV Tempele and at Channels TV to share your thoughts on our discussion points this evening. But let's take a look at some of the numbers now, and we'll begin, of course, with the NSE, that's the equities markets. It was another disappointing week at the Nigerian equities market as key indicators extended declines for a fourth week in a row. The all-share index fell by 2.42% as trading closed negative in all 5 sessions. Declines in the shares of high-capped stocks across consumer goods, cement, oil and gas and banking sectors was responsible for this week's loss. Total volume traded fell by 71.1% to 823 million shares, valued at 5.44 billion naira, and traded in 11,634 deals. Market breadth remained negative, with 10 gainers, topped by May & Baker, against 46 losers, led by Forte Oil. Standard Alliance Insurance, Diamond Bank, and FBN Holdings accounted for 26.6% of volume traded during the week. And the unlisted securities index of the NASD OTC closed flat on Friday at 612.53 points. Market capitalization and that climb stood at 414.52 billion naira. We'll go over to the FMDQ OTC, where sentiments remained bearish in the local bonds market this week, as average yield across benchmark bonds trended higher on all sessions. Yesterday, however, investors showed some preference for dealing at the longer end of the yield curve. The DMO offered 35 billion naira during the week, and all that got some good subscription from investors. In the T-bills market, sentiment in the Treasury bills market was also largely bullish as rates closed the week lower. And of course, what you have on the screen there explains what we mean by the intro we have just read out to you. There are 2 key concerns now in the market: the delisting of Ashaka Cement and, of course, the suspension of trading on Ikeja Hotel. I have with me here equity research analyst at Morgan Capital, Lanre Ugumola, to review these issues. Lanre Ugumola, thank you very much for coming through.
Thank you, Temple, for having me.
Okay, so what does this spate of delistings and suspensions imply for investments in the market, especially the minority investors, because they are the ones almost always at the lower end of the curve?
I think specifically for the issue of Ashaka Cement, the listing, I think, is in line. Is in line with the company strategy, is in line with Lafarge Africa, and also the company just don't make a free float, and it's just they gave the company actually twice, doing the MTO and doing the voluntary offer. They gave opportunities for the shareholders, minority shareholders, to tender their shares for Lafarge Africa or sell their shares outrightly. And the window was for so long. And even part of the delisting process, NSE regulation requires that the company must set aside some funds that will be enough to cater for the outstanding shares. So even after the delisting, any shareholder can still come forward and still trade the shares for cash.
So clearly there's no need for any investor to panic.
There's no need for investor to panic, actually.
Okay, so the company also says it has a free floating deficiency of 20% and it wants to avoid regulatory delisting. So do you consider this as a strong reason to actually embark on this? We know it's a regulatory concern, but aren't there ways around it? And of course, if you add that to some other issues, you know, the plant had been affected a couple of times in the northeastern part of this country.
Yeah, I think the business issues that Ashaka is facing now is not just Ashaka. I think it's across the cement industry, and actually, they're not so fundamental to worry about. But you will realize that Lafarge Africa is a major shareholder in Ashaka Cement. So having Ashaka Cement listed on the exchange and Lafarge Africa also listed on the exchange, it doesn't make sense really, because right now they are like more or less one company. So I think it just makes economic sense to just delist. And you know, beyond the deficiency, the regulatory expectation from listing on the exchange, the company could just easily avoid that by delisting. So I think it's strategic. The minority shareholders will not lose out, and the option is still on table. It's still on table, yeah.
Okay, so let's move over to the issue of Ikeja Hotel, and it looks like that company has some kind of corporate governance issues, which is the reason why there's a suspension on the trading of that security at the moment. How does this concern investors? What's the kind of implication it is going to have on their investments?
Okay, the issue of Ikeja Hotel, I think, is long expected. The company has been involved in a lot of imbroglio in the Igbo family, and I think the Securities and Exchange Commission, they are currently investigating. The matter is that EFCC has also stepped in. I think they just a lot of mess around that, and I'm sure in order to protect the investors, the Nigerian Stock Exchange took that proactive step to actually suspend trading on the shares pending the time that all issues will be resolved. I think the regulatory move is fine, is okay, and it will help it will boost confidence in the market that all these issues where people just step in and you have to follow the rules basically. So I think it's good for the market.
Okay, so next week we should be seeing the MPC, the last MPC meeting for the year 2016. That's, of course, the CBN and its 12-member committee. They should be having their decision. In terms of what analysts have projected, saying that, look, we don't see anything changing, we're likely to see the rates left unchanged. Is that what you're actually expecting to?
Well, it's funny. We believe the rates will be left unchanged. But the numbers coming out from the NBS last week is not so good at all. The inflation is at 18 is above 18, and so we have to battle with whether we want growth or we want reduction in inflation. You can't have it both ways, but with the management of the MPC that we currently have, we believe the rate will be left unchanged.
And in terms of their focus, we are expecting to see the price of petrol, hiked again. We're also seeing the changes in the global environment where you've seen populist and isolationism, coming into play right now. What do you expect their focus to be on this time to, arrive at that decision?
Yeah, I think the Minister for State for Petroleum came out last week and he said it clearly that he has no mandate to hike the price of petrol, right. But the templates will be tinkered with, and I want to strongly believe that he's a man of integrity and impeccable character, and the price of petrol might not be hiked, but fundamentally, 145 is still very much at the subsidized rate, and we know that going forward, it might not be in the immediate term, but we know the price will still be hiked someday.
All right. Larry Ogumola, Equity Research Analyst at Morgan Capital, thank you very much for coming on the show. It's always a pleasure to have you around. Also, beside the MPC meeting on Monday and Tuesday, when the briefing on the outcome of the meeting will hold, more activities are lined up for the week, and that's the SEC, the CMC meeting, which will hold on Thursday. NBS is also expected to release its third quarter GDP data. All of these we want to encourage you to watch out for, as Channels Television will be bringing you updates as they are released. And that's all the time we have for the show tonight. I'm Temple Ashaju, and I'll see you next time.